Hello again, traders. Doing jump there from DRFX, Forex and Trading. Then we're taking a look at the recent movements that have been taking place on the pound Aussie dollar 4-hour chart and identify if there are going to be any trading opportunities that we can take advantage of on this currency pair over the next couple of days. Now here you can see that the market formed several waves over the last several days, 2 bearish and 1 bullish wave, all pointing to the formation of a consolidation setup on this time frame over the next couple of days. So these 3 waves essentially told us that the market is going to be forming this consolidation setup, and what is now needed is for the market to form a 4th and final one in the form of a bullish rally that would complete the formation of a 2nd support point, complementing the one formed here, which would then allow us to form a support boundary here. So we already have the resistance boundary formed, so the market now needs to provide us with a 2nd support point that would allow us to complete the support boundary and complete the overall formation of the pennant setup. Now what you'll find across the currency market is that there are certain types of bullish and bearish waves that tell us that the market is going to be forming a consolidation. Once you see 2 like this, a bearish wave followed by a sharp bullish wave, or vice versa, it is normally a strong indication that the market will form a 3rd wave that would confirm that the market is going to be forming a consolidation setup. Now it's very important when it comes to the currency market to be able to make the distinction between candlestick patterns that are forming trends and those that are forming consolidation patterns. When you're trading the currency market, you generally have two types of trading strategies. One that takes advantage of trending markets, and the other that takes advantage of consolidation setups that are formed across the currency market across all time frames. Now, when it comes to the formation of consolidation, as I said, there are certain types of waves that tell us that the market is going to be forming consolidation. Once you're able to predict these, once you're able to identify these waves, what it does, it allows you to immediately change your trading strategy from a trending one to a consolidation one, so that you are not caught up by reversals, the sharp reversals that the market is presenting as it forms its consolidation setup. So instead of being surprised by reversals that take place in trying to trade your trending strategy, you will then be able to confidently switch your strategy to be able to take advantage of these waves that are presenting themselves as the market forms a consolidation setup. So in the trading manual, what you'll find is that there are several examples, there are several ways in which you can identify the formation of consolidation, and this needs to be an essential part of your trading so that you can predict when the market is going to be changing its movements and its patterns. So in the section of the trading manual that deals with the formation of consolidation, you will find several examples and several patterns to look out for when identifying and predicting the formation of consolidation. So once you know what those are, you can be in a much better position to be able to handle the change in market movements of the currency market and to be able to take advantage of them as the market forms the consolidation setup. So now that we have established the high probability that the market is going to be forming a consolidation setup, the next thing to do is to anticipate the formation of the bullish wave that will complete the formation of a consolidation, and in so doing provide us with a possible trading opportunity to take advantage of that rally. So for the time being, the assumption is that the market is going to be forming its second support point somewhere in this region here. It could form it at this area here or lower, but just for the sake of this analysis, I'm going to assume that the market is going to be forming this support point here. In trading the rally, we can do one of two things. We can either trade the initial bull signal that is formed at this area here, or we can trade signals that are formed along the way as the market makes its way towards the resistance boundary. The choice of where we're going to be entering the market is usually dependent on the size of the stop loss that we would need to take advantage of this movement. Now, as you know, with my trading strategy, I generally use stop losses of between 40 and 45 pips, targeting 50 to 70 pips in trading gains. So as long as the signal that is given allows me to meet those requirements, then I can take the trade. And usually it will take place either at the initial signal or somewhere along the way as the market reaches the midway point of the movement towards the resistance boundary. So that is the situation on the pound Aussie dollar 4-hour chart. Based on the nature of the bullish and bearish waves that have been formed so far, it is telling us that the market is going to be forming a consolidation setup. And what is going to be needed now is for the market to form a bullish movement that will allow us to complete the formation of the setup and also provide us with a trading opportunity to take advantage of this rally and to capture another trading gain as part of our aggressive short-term trading strategy. So let's wait until the market provides us with that signal and trade it aggressively to capture our strong trading gain.